Hey, look, man, you got the floor. What the hell's going on?
Dude, I don't know, man. This is so I'll start by saying, Joe, that was a phenomenal speech, man.
I
You
appreciate
hit
that.
on everything that I've been talking about in my career for the past 13 years. I've been saying this. You guys know me. You know I grew up very poor. I've been on Wall Street for a really long time, or technically off Wall Street rather. But a lot of what we're talking about is we sow the seeds of this discussion going back to the Fed's response to the financial crisis and their response to every single sort of equity market pullback we've seen since the financial crisis. And then you layer on the fiscal policy response that, in our opinion, was a function of the zeitgeist against the incessant monetary easing at every equity market sniffle that we've had really throughout my career. And this is what you get. You get food inflation. It's up at a 40-year high, 40-plus-year high. You get shelter inflation. It's at a 30-year high. You get utilities inflation, how much it costs to turn the light on. And I'll tell you, I've been evicted 7 times in my life. I've probably spent a cumulative year of my lifetime of my childhood doing homework in the dark because we couldn't afford to keep the lights on. And that inflation statistic is at an all-time high. And what do we get out of it? We got a stock market bubble.
When you think, Darius, about what's going on right now, how do you underwrite what the actual inflation number is? Right, 7.5%. I think everyone here agrees is really, really bad. But I actually don't think it is highlighting how bad of the scenario it is. And there's 2 components. One is the official number actually accurate? And then 2 is everyone in an economy obviously doesn't experience the same level of inflation. Like, how do you think about how bad is it for the most vulnerable people in society?
It's terrible. So I'll say there's 2 things. One, when you look at CPI statistics, the BLS is making a tremendous amount of assumptions on what goes into the basket, what comes out of the basket. For instance, they made some revisions in this month's data to sort of more accurately account for the shift to consumption patterns throughout the pandemic. So there's a little bit more weight on goods inflation relative to services inflation. But number 2, obviously, when you look at it and parse it, and I would say the BLS actually does this on a biannual basis in terms of surveying consumers and their expenditures and how much different sort of quantiles of consumers with respect to their income or their wealth distribution, how much they spend on certain goods and services. And the last time I checked that out was a few years ago. But the reality is, the lower you go down the income spectrum, the greater and greater the shares of things like rent, energy, medical costs, and those things take up of your consumption. Your consumption is very much not discretionary. If anything, the last time I checked, it was pretty much consumers are operating at around a net negative margin when you factor in everything that they probably have to spend money on. And so you need wage growth, obviously, to perpetuate any sort of growth in that cohort.
When you start to think about various parts of the metrics, so like things like gasoline is up 40%, how much of that is like monetary fiscal policy and the lack of discipline there and some of the past actions over the last 24 months versus supply chain? And is it possible to break out like the monetary policy impact versus whether it's supply chain, pipeline, regulation, whatever else is going on there?
You could parse it out, but there's no point to, right? Like, when we talk about supply chain disruptions, we have to remember supply chain disruptions is not just supply, it's demand as well. You can't have a supply demand imbalance without factoring in demand. And obviously, as a function of the record monetary and fiscal policy that we received throughout the pandemic, biggest fiscal programs ever. I think we did about 25% of GDP in fiscal stimulus. Obviously, the Fed's balance sheet doubled. Those 2 dynamics really contributed to an excess amount of demand relative to a declining or significantly reduced productive capacity of the global economy. And so that's what you have is this sort of overstimulated demand and understimulated this sort of supply dynamic that created a lot of this inflation. So in my opinion, you can try to parse it out. And I think it's important to parse out as an investor because that allow you some more visibility on which avenues to further express these types of bets. But the reality is, as a human being, as a consumer, who gives a fuck, and part of my language, right? Like highest all-time, highest food prices you're spending since 1981. There's not a family in America that gives a fuck, right? I'm sorry, and again, sorry, part of my language, but I'm very frustrated by this because I felt this for many, many years of my life, and I understand what people are going through and they're struggling right now, and they're probably asking folks for questions, and they're tuning in to shows like yours, and thank you for providing leadership here. because the reality is there's not enough leadership on Wall Street for what is a goddamn disaster.
What is your take on interest rate hikes kind of moving forward? Obviously, we see people like, JB Diamond, JP Morgan saying that there's going to be 6, 7 different rate hikes. There's various metrics in the market that are showing, pricing in of people thinking 50 basis points in March, a full percentage point. Like, what's your take on how many and how severe? And at this point, can they ignore it anymore? Like, do they have to hike interest rates after a CPI print like this?
Well, let me start by saying the funny joke in the room right now is that they're still buying bonds. The Fed is still doing QE right now. I mean, it's obviously not funny. It's a disaster. But you made a great point earlier, right? About, once the rich people start losing money, then they'll phone up the Fed, they'll phone up the Treasury and say, hey, look, guys, this inflation's a problem now. At first, right? Like we have record corporate operating margins here in the U.S. If you look at the S&P 500 constituents. And part of the reason we have record corporate operating margins is because all of this inflation that us consumers and businesses are eating is going straight to the bottom line of these major corporations who are obviously in bed with Wall Street, who are obviously further in bed with the folks down in DC. So, they're laughing to the bank. And this is why you've seen a record earnings bonanza. That's why you see, again, record operating margins. But there comes to be a point where it becomes a political problem, right? At some point, it's a political problem for the people who run the banks, the people who run these companies, when their workers are showing up saying, hey, look, I'm out of here if you don't pay me X, Y, Z. And once all that starts to happen in mass, and we're obviously seeing that in the most recent jobs report on last Friday, we got the average hourly earnings statistic jumped up to 9% on a seasonally adjusted annualized rate of change basis. That's the fastest number we've seen since in a year. But the employment cost index, which measures everything that you have to pay your employees to get them to sit in a seat and make you richer. That number ticked up to the fastest growth rate we've seen in 20 years, going back a couple of weeks ago. So, the reality is it's now starting to become a problem for them, which ultimately means it's going to become a problem for markets because that's the kind of the feedback mechanism that the Fed uses to drain liquidity and ultimately demand out of the system.
What questions you got, Joe?
Darius, what's going on, man? Appreciate that shout out at the beginning.
That was good, man. Real good stuff.
My question would be around that though. Like, what do you think people should do, right? I think it's easy for us to sit here and say, hey, start buying equities, go invest in the stock market, make sure you can capture some of this upside if this was to happen again, maybe go get a raise at work. But ultimately, some of these things are really hard to enact if you're in a position where you're not able to do this stuff. What is your general advice, your general take on kind of what people in this position should be doing?
Yeah, so I'll start by saying I did this. I asked for a raise and didn't get it and left and bet on myself. And that turned out to be the best decision I've ever made in my entire life. And so you obviously need to be financially empowered to make decisions like that. And so hopefully the folks listening to your program are watching and understand, the central core message you guys have been making this entire time, as long as I've known you guys to be doing this, which is, look, give yourself some financial freedom and flexibility by making thoughtful investment decisions, by saving money, by allocating assets appropriately, and ultimately giving yourself some financial freedom. Because again, the only solution to this as a human being is, again, to walk into your place of employment, say, what you're paying me is not keeping up with the rate of inflation. I know you've made a shit ton of money in the last few years. It's time to share some of that. And if your boss says go F yourself, then you leave and you walk out of the door and you bet on yourself. And I understand most people listening to me listening to this program now probably don't have the means to do so. So the second best thing is start saving money. I very much is a personal experience of mine in the last years. I would not have been able to leave and start my own firm if I didn't save money in the preceding years in anticipation of potentially having to make that pivot. And so you need to give yourself financial flexibility, which means you can't be going to the damn Gucci store every week. You can't be, going out to eat every weekend. You can't be partying and picking up bar tabs and stuff. This is not the time, in a serious inflation episode to be sort of, cavalier about your spending. If anything, you want to give yourself incremental flexibility and start saving money in case you do have to make that change. And ultimately, I think a lot of folks will and already have.